Welcome back. Joining us on the show now is Kunal Shah of Nirmal Bang Commodities. Kunal, hi. Welcome to the show. And we've started yet another week with some declines, especially for the metals as a sector. So whether it has been about precious metals or base metals, it is trending on the negative side here. We'll start with gold and silver, where we are trading at 2023 lows now. So whatever gains we saw in the beginning of 2023, the all-time highs that we started January with, Feb actually has given all of those gains away. At these current levels for gold and silver, what would your strategy be for the month of March now?
Well, I think for the month of March, if you see, I don't see any meaningful upside coming in gold and silver going forward. The main reason for me to say that is the interest rate in US, in Europe, in UK are bound to move up further. And considering that when on one side there is interest rate hike going on other side, the liquidity withdrawal, which is taking place in Europe and in US. So in US, every month, $100 billion is being tapered off from the Fed's balance sheet, and almost $20 billion is being tapered from the European Central Bank balance sheet. So now we are right, gold is stuck between a scenario where the higher interest rate offered by the central banks are not causing investors to buy gold. But going forward, when the things become when you start to see slowdown in US, when you start to see slowdown in Europe, then at that time, people will start buying gold right now. So I think it can break $1,800 and may well test $1,785 to $1,780 on COMEX. Silver may, break or test $20. And I think the trend is sell on rise. So for the month of March, we are not expecting any meaningful upside in bullions, and it would remain under pressure.
So while selling at these current levels also is a great idea, but Kunal, how would you see the current year ending then? I mean, is there any respite for the investors? Are these good levels for investors who are planning to hold it for a longer term advisable?
Oh, Manisha, I think for rest of the year, I'm very bullish going forward. So in the second half, gold prices are going to shoot up. Because at some point, there will be an inflection point, and that will indicate that gold cannot go down beyond a point, because the more Fed does, the more ECB does, that is definitely going to cause slowdown in the housing market. That is definitely going to, right now, till now, from last 3 months, we are not seeing any impact because of the lag effect of the humongous stimulus which is being given by the Western central banks. But I think going forward in June, July, August, we will see, a slowdown in all these developed economy, or even if no slowdown, then the interest rate will not move up significantly. So at that time, people are going to buy gold. So we are already in a scenario where the geopolitical landscape of the world is clearly in a big doldrums right now. We don't know what is going to happen from the geopolitical point of view. So it's a strategic investment. There's no second thought on it. And I'm expecting, in the second half, gold to really move up and test again, kind of $1,950, $2,000 kind of level conservatively. So my outlook for gold continue to remain optimistic from the second half of the year.
Okay, so still a sell. Feb has seen a decline of anywhere around 6 to 12% for gold and silver, both of these commodities, and March pretty much could continue that way, but the year ending is expected to be on the positive side. Kunal, would you say the same about metals? Because just to give a sense or a context, in the month of Jan, we saw copper prices gain up by 12%, zinc was up 14%, aluminum up 10%. But take a look at Feb, and we've seen copper come off by 6%, aluminum down by 11%, zinc is off by 12%. So whatever gains that we saw in the month of Jan, whether it was about China reopening or inventory slide that we saw in the second half of 2022, that euphoria or that reason for buying also seems to be dissipating.
See, Manisha, we saw a humongous upside in metals, precious metals, and even base metals, mainly because of China opening up. So from July, August, September, October, November, December, 6 months, Chinese economy was virtually closed. And after that, we've seen a pent-up demand and all the metals shot up. But now, after the pent-up demand, the reality is the China is experiencing a slowdown in the real estate sector that is going to cause slowdown in the demand. And rest of the world, because of the tighter liquidity scenario, the growth is going down. So if the growth is struggling, if the global GDP growth is going down, how the metal prices are going to go up? So the story about, Chinese buying and all, it's not going to last. And eventually metals are going to suffer going forward. I am not optimistic about the outlook of metals. I'm expecting metals to correct even from the present levels, and at least another 8 to 10% cut. I would not be surprised. So I continue to remain pessimist about the outlook of base metals, and I'm not expecting any major rally to take place. Sell on rice still looks very weak, Manisha.
What's your sense about the ferrous metals? Because they seem to have performed better than the non-ferrous metals. So whether you look at steel or iron ore, that one is still trading slightly marginally in the positive, even if.
Yes, the ferrous metal, the story is about the production cut. You see, China has started to come up and say that they are going to cut production of steel because of environmental issues and all. So that's the reason why ferrous metal is not going down. But I'm not expecting any major upside even in ferrous metal also, even from the domestic point of view and international point of view. So I expect prices to soften going forward, and I'm expecting at least 4 to 5% drop in steel prices globally.
All right. So while the month of Feb is closing negative for the industrial metals, all base metals and non-ferrous metals have seen a very sharp decline. That's exactly what Kunal is saying, that March also will not perhaps give you a reason to go long in many of those metal prices. 8 to 10% of a decline in many of these metals is what perhaps you can anticipate. Thank you, Kunal, so much for joining us. And with that, it's a wrap on Closing Bell. Thank you so much for watching.